the option. Awesome. What's going on, everybody? Hope you're enjoying your evening. This is Option Selling Strategies Part 1. Tonight's class is going to be hosted by AP. This is actually a two-part class. So Part 1 is tonight. Part 2 is going to be a week from now, same time next Monday. This is a component of options trading that's not really talked about much in the group. We don't do a lot on the sell side. It's not something I do, not something TJ does, not really something that moderators or admins within the Impact Discord focus on. We pretty much do everything exclusively on the buy side, but there is a whole nother side to options trading that we want to let AP introduce. If you've been in the group for a while, you've definitely seen her around. You've seen her in the Profits and the Stock Talk on Voice. Anywhere in the group, you've definitely seen her there. She's been making her presence known and giving a lot of value on the sales side. So we just wanted to allow her to host tonight's call and share some of the information and knowledge that she has with you all. So with that being said, I will pass the floor over to her.
Well, thank you. Thank you. I appreciate it. I want you to know that I do not take this lightly. I do know that, you all have an established community that has been established for years, and I've only been a part of that community for a little, not very long. I'd like to believe I've added value, as you said, but I definitely know this is, not something you just let people come to the podium, lightly. I know you don't take that lightly, and I don't take lightly. I want you to know I appreciate that. I appreciate you all for letting me really share the selling side of options. And so I'll do that as best I can. I'm going to try to make it as, succinct as possible. Definitely don't have any hesitation with putting questions in the chat. As JT said, this is going to be a two-part thing. So I'm going to talk, I'll give you the topics, and then next week will be a lot more specifics as far as the strategies go. But this week, I definitely want to introduce option selling and just help you to see what option selling is really all about. All righty. So I'm going to share my screen. There we go. I hope everybody can see the screen at this point. Can we? Believe we can see. I can see that we're sharing. Okay. So our topics are going to be, this week, we're going to talk about an introduction to option selling. And then next week, we'll talk more specifically about the strategies that go along with option selling. So, some of you might be, who is this AP person? Where'd she come from? She came out the woodwork. Who are these people, right? I want to know that I'm Arlissa. I'm Arlissa Pinkleton. I'm a wife, I'm a mom, I'm a grandma. Actually, I have, between my husband and I, we have 27 grandchildren. I have one biological grandchildren. My husband has lots of grandkids, but those are my babies too. So I'm an author, I'm a digital creator, I'm an entrepreneur. I'm a mechanical engineer by degree. I went to Tuskegee University. Hey, Tuskegee. I graduated in 1992. So I'm a little bit older than some of y'all, but not everybody, right? I'm a math professor. I teach college algebra and pre-calc over at the University of North Florida, because I live here in Jacksonville, Florida. My children live here as well. I'm a stock and options trader, coach. I'm a trader and I'm a coach, and I am a friend of God. Yes. What I'm not, though, is a trading professional, any shape, form, or fashion. I'm definitely learning all the time, and I'm not liable for anything that you take from me. Hopefully it'll all work out. You'll learn some good stuff, but I'm not liable for anything that goes wrong. I won't take credit for the good or the bad, basically, as we go. Just a little bit of background about me. Back the same time other people started trading, right? I was living in Bahrain in the Middle East. Don't know if anybody knows where Bahrain is. It's about an hour's by plane to Dubai, and it's right next to Saudi Arabia. It's basically in the Middle East, basically very, very hot. So I was living there, and my mom had just passed away, and I was there basically out. I'm an only child, so I was out, my husband and I, out in the middle of the desert, basically. And I decided I was going to learn how to trade. I was like, there's people doing this, and why shouldn't I? I had a friend of mine who learned how to trade, and he actually kind of taught himself. And I was like, he ain't no smarter than me. So I went and started learning how to trade too. And I started trading as a seller. So I started trading as a seller. I learned, actually, many of you may know Randy Yancey from the Black Stock Investors Group and all the other stock places. Randy didn't know it, but he was my mentor. I would send him questions all the time and he would always reply, he'd always respond. So he was my unofficial mentor on the selling side. So I sold options for a long time. Then I kind of felt like there was stuff I didn't know. So I went and bought a class and spent a whole lot of money on a class. And I learned a lot in the class too. It wasn't a waste of money. But then I learned how to buy options. So I bought options for a little while and I was like, I understood it. I was like, well, I won some, I lost some more, and then I lost some more. I was like, okay, let me go back over here to the seller side where stuff is going on, where it's a very straightforward, 1, 2, 3 kind of step. So I went back and became a seller. And then I designed a strategy that was with SPY and Triple Q. The strategy basically was back when SPY and Triple Q did every other day expirations. And we would get in one day and exit on the expiration day. And we did that for a long time and made a bunch of money doing that with credit spreads until the market got super volatile in like 2022 when the volatility kicked back in, and my strategy didn't hold up as well under all that volatility. But by then I had formed the educator to trader community. So we continued to learn strategies and continue to learn how to be sellers. And I've continued with that community all this time. I have a crew of people who hang out with me on a regular basis. I have a membership and we hang out together and trade together as a seller community. But this year I decided I wanted to expand my own knowledge. I was like, well, I know what I know, but I felt like I was kind of like, I don't feel like I had boxed myself in, but I felt like I had boxed myself in. So I wanted to expand my knowledge of technical analysis and other things. And I kind of went looking to see, who did I want to partner up with? Because I felt like I didn't just want to take E2T and take me into a place where people were like, what you doing over here? Don't you sell options? Because that's what I do, right? So I wanted to be in a place where I could kind of come in under the radar. And then TJ was like, hey, I see you here. And I was like, I've been following you all this time. I was like, dude, I'm trying to be in here on the low, I'm trying to learn some stuff quietly, but it's been wonderful. I have really loved the community. I have loved Impact Investments. I'm so glad I ended up working along with the organization, right? So this week, we're going to talk about what is option selling, why sell options, who should sell options, when do you sell options, and how. The how is really going to come more next week, but we're going to talk about the other 4 things today. So what is option selling? First, put me in the, before I go here, put me in the chat a 1 if you've heard of option selling and some strategies with option selling. Put me a 1 in the chat. And if you've not heard of option selling, like, I don't know what you're talking about, I have no idea, maybe put me a 0 in the chat. If you know some stuff, put me a 1. If you don't know, I don't know nothing, then put me a 0 in the chat. Yep, we got some, yep. Let's go. Some 1. Oh, we got lots of 1s. Covered calls, cash secure puts, Josh, 1, but no strategies. Yep, that's it though. Gotcha. A lot of 1s, a few 0s, but I think one of the things that is going on in this space, in the options trading space, is a lot of people started at the time that we all started, basically, and now we've got lots of gurus. And you never know which guru you hook up with that's really going to provide for you the value that you're looking for. And I have to say that with TJ and JT, you all definitely, don't undersell yourself. You make it very clear that you're doing what you do, and you do it well, by the way. You're not, like, this is a good spot to be. There are a lot of, I've been to a few other places, not too many other Discords. I've been other places where people said they knew and they had, and they didn't know. I like to say that I'm still learning all the time because I find out all the time. Y'all see, I ask a lot of questions because there's just some things that I just don't know. And I'm not trying to get to where act like I know it all. No, I'm not. Cool. Option selling is when you offer someone else the opportunity to buy or sell a stock at a certain price in the future. So if you sell a call option, many times you'll see this with the covered calls. moniker, but you can actually sell naked calls. You have to have like the highest option level to sell naked calls because there is literally unlimited losses. But you can, when you sell a call option, you're promising to sell them to whosoever at the price that you're using for your strike price. So if you say, I'm going to sell these call options, what I'm saying is if the price goes past my price, my strike price at expiration, I'm going to sell these options or these 100 shares, I'm going to sell them at my strike price. That's what you're saying when you're selling a call option. You're saying, I'm promising to sell whosoever these stocks, these 100 shares of stocks with this option at expiration. If I'm, of course, still in the trade and it's past my strike, I'm going to release 100 shares to the market, basically. If you're selling a put option, many times this is called cash secure puts, or you'll hear people talk about selling puts. You're basically promising to buy the stock at your strike price, at the price that you've decided. If you say, I'm going to sell a put option at the 100 strike, and the price gets down below 100, and you're still in the trade at expiration, you're going to need to buy 100 shares at that price that you have at your strike price, right? That's what you're saying. So as a call, selling a call option, you're saying, I will release 100 shares to the market. And if you're selling a put option, you're saying, I'm going to buy puts at this price, which is kind of weird because you're saying I'm selling, but as a call, you are selling. And if you're doing selling a put, you're actually going to take on shares. There are people who use selling calls and selling puts as what's called the wheel strategy. They may sell puts first. If they get exercise and they end up with the 100 shares, or the 100 shares is put into their account, then they will sell covered calls until they get called away, and they just continue to rinse. And that's a whole strategy. That's a whole, the wheel, you may have heard of it. That's a whole strategy where you start with put options and then you sell covered calls, you sell call options. In exchange for making this promise, you receive a payment up front. Anytime you're a seller, you get paid to play. We know as buyers, we have to buy these option contracts. We pay our 100, our 110, our 22 sometimes, because K-Wiz or Kai-Wiz will have us at $22 contract sometimes. Whatever the contract is, that's when you're a buyer, you have to pay for them, right? That's why it says debit when you're picking your options contract. But when you're a seller, you actually receive money. As soon as you enter the trade, you're given a premium. As soon as you enter the trade, you're given a premium. So you are paid to play when you're a seller. Selling options is the complete opposite of buying. That's what you need to understand. Selling is a complete opposite of buying. You're entering the trade with a sale to open. Many of us, when we're on the option chain, we're in the ask column. And some of y'all like, well, what's this bid column do? The bid column is for the sellers. Bid column is for the sellers. We are selling options. So when we enter those trades, we're selecting the bid column. It costs you nothing to enter as a seller. You don't pay any money to enter, but what you do is you use your collateral as leverage. So even though I'm not going to pay anything to enter, the broker is going to block up my buying power for the amount of the trade, depending on what trade you're doing. If you're selling puts, you're going to do the amount based on whatever strike you have. If you're selling spreads, you're going to have the collateral, the amount of the width of the spread. The broker is going to block that buying power from you while the trade is on. Even though you took in money, the broker is going to block away. You're not going to spend any money, but you're going to leverage your collateral. And that money stays blocked away until the trade is gone, it's over. And the reason they block it is because if you're doing a spread and the trade doesn't go your way completely, the broker is basically going to use that money to have you to perform what you said you would do. If you were selling a call option, it's going to use that money to perform the selling of a call, the selling of 100 shares. If you had a put credit spread, let's say, it's going to use that money to manage the performance of the option that you said you would sell. All right. Do we have any questions so far? Any questions so far? Okay, shout out Kai Wiz. Whoop. Okay. Why should you sell, why should people sell options? Why should you sell options? Well, one good reason is you get paid when you enter as a seller. Okay, you get paid when you enter as a seller. Theta decay is your friend. So you can enter these trades literally the day of, the last hour, the last 15 minutes, the last 2 minutes, and make money. And the price doesn't have to go anywhere. There's less moving parts when you're selling options. Really, for buying, we got to get the entry right. We got to get the charting right. You got to make sure that the price is still moving in the direction you want it to move. You got to time your exit properly. There's a lot of different things that have to happen when you're a buyer. But when you're a seller, really, you're working on your entry. You get your charting to see where price won't go, because as a seller, you want to be out of the money. As a seller, you want to be out of the money. As a buyer, you want to be in the money, right? But we do know there's a lot more out of the money than there is in the money. There's definitely a lot more. I'll come back to your question, T-Mac. The strategies can be, and mostly are more passive. So they're less stressful. I know we can raise our hands about the amount of stress that you can be under when you're in the midst of a trade. There's a lot of stress to the nervous system that happens. It's going against you, so you're stressed. You're making a bunch of money, so your system is kicking. All the chemicals are going, no matter whether it's going good or not going so well, your system is still firing, right? So as a seller, you can minimize some of that stress on your system. One of the biggest things that I think is a pro about selling options is that you win trades in more price action situations, right? When you're a buyer, if let's say you're buying a call, you need the price to be moving in the direction of that call. If you're buying a put, you need the price to be moving in the direction. And if it just sits and stalls, basically it's eating up your money and it's not doing what you want it to do. Time is passing. We get into, you need to come on, you need to come on. But when you're a seller, you will win the trade as a seller. If price moves in the direction you want it to, you win. If price sits still, price can just do nothing but consolidate. As long as it doesn't drop past your strike, you still will win that trade. And it can even come back towards you and you're still going to win that trade as long as the price action doesn't go past your strike. As long as the price doesn't go past your strike. I hear somebody's mic open. You got a question? Okay. T-Mac says, I thought when you buy a call, you're using your money. You said you don't pay anything. Yes, when you buy a call, you do use your money. But when you sell a call, you do not. You take in premiums when you're a seller. You receive money when you're a seller. Okay. Price does not have to move for you to make profits. You just need it not to expire past your strike. Okay. Now the drawback there are some cons to selling. What are the cons to selling? Well, there is a defined reward, right? What you take in as premiums, that's all the money you're getting. It's no like when we're buying options, as long as the price keeps moving, your money keeps moving. Not when you're a seller. If you said, I'm going to sell this credit spread for $20 or $30 or $50, no matter what the stock does, you're going to get, that's all you're getting. You're not getting any more than that in the trade. The price can run to the moon. But if you decided I'm doing a put credit spread, you're going to get what you said you agreed to get. All right. That can be seen as a drawback because you feel like, NVIDIA's moving on. It's going to the moon. People made $2,300 on one contract. And if you were selling it, you're like, I made 50. And that's all you get. So the reward is defined, right? The return on the collateral can feel like it's low in a lot of cases. So if you're doing credit spreads, you can do credit spreads like a one spread, which will have the collateral of $100. But then you could take in $10 or $15 or $20. And again, that's all you're going to get. And if the trade turns against you, your $100 could be, called away to perform your options contract that you said you were going to do. So a lot of people see the return on the collateral as kind of low, right? And it can require more collateral for desired profits. So if you're going to get $50 for each contract and you really want to make $100 or $200, then you need to multiply the number of contracts. Well, the number of contracts, as you multiply them, you're going to put more collateral up in order to get the profits. Now, the positive side for that is you don't need the trade to do anything. It can really just kind of chill and I won't say kind of sit still, but it can literally sit still. How many of you have been in a good trade and had it to go bad because you stepped away or you weren't looking at the trade? If that's you, please put a me in the chat or raise your hand. Josh, me. Like this trade was doing its thing, and I go, get some lunch and come back. The price don't hit resistance and turned around. Like, what are you doing, Tesla? You were going fine today, and then you decide you're good at 197. We're not done yet. You still need to get to 200. What are you doing? No. How many of us? Lots of us have had good trades go bad because we stepped away or somebody made a phone call like today. That actually was what happened to me today with my the TQQQ trade that Kendra. I had a meeting at 1:30. I got on that call, and when I got off the call, the price had hit resistance and come back. I was like, this trade was going fine. And as soon as you stop looking at it for 20 minutes, there you go. There you go. Right? How many had a great trade all planned out, but you missed the entry? Next thing you know, the price running, and you're like, I'm ready because I was ready for my entry. I was sitting here watching and ready for your entry. Perfect time to enter this trade. So, and then soon as you too late and the price pops and run like Tesla. We can talk about that again today. Some people were like, what? I didn't see the message. I didn't see the call out. No, Davinia, I didn't see the call out. And now that I finally see the call out, Tesla done ran on up and I got left behind. NVIDIA on Friday. We got left because it don't pop. JT at the open with Apple today. JT, you went on without us. Apple went on without us. What's the deal? Yep, had a great trade all planned out. Missed the entry. Enter a trade that seems to have good momentum only for it to stall and eat up your premiums. Like you were running good. How come you hit this spot and now you just go and dance around and do nothing? What are we doing? Premiums dissipating. You could just see them flying out the window. No, and then you almost like, I don't want to close my trade because then it's going to decide it's been ready to move. But I can't sit here in this trade hoping for the best. That happened to us on Friday. What was that trade you got us out of? Tesla, I think it was, JT. And it started to move after it was just sitting there for a long time. Those are all the things that are buyer. Those are buyer things. TSM, yes, exactly. We could call out stock all day long for those three things I just mentioned. And that's just three of the things that buyers face, right? That's just three of the things that buyers run into. So who should sell options then? Who should sell options? Okay, people who don't have the time to watch their trades all day long. Perhaps you got a job, a business, kids, life. You decide you want to go to lunch with your friends. You want to have brunch. You like, I can't brunch because I'm watching my trades, sis. I'm not brunching, or I'm at brunch and I'm spending the whole time staring at my phone because what you're not going to do is cause me to lose my money. So no, if you got a job, which many of us do, have a 9-to-5 or something that takes us away. How many times have y'all heard me say, I missed all the fun because I was teaching class? Like I've been in class before. Y'all heard me say this last week. I had my AirPod in, I had my earpod in while I was teaching. Like when TJ say we out, I'm gonna be ready. You're not gonna leave me in this trade. Or you have a business, you're running a business, which includes which needs your attention, your children, something happens and needs your attention. And your trade that was going fine is no longer. These are people who may need to sell options. More passive investors. Maybe you're not interested or your life is not the situation this week, this month, today may be something that is got other things happening. Maybe you're distracted with other things of life and you need something that's passive. What I want to make sure that I make clear, and I'm going to say this earlier, is I'm sharing the things about selling options as a supplement to buying options, not as a replacement. I mean, you can replace it. You can, you know, you can use that because it's your money. You're the CEO of your own portfolio. But these strategies can be used in conjunction with buying. Perhaps you say, okay, I'm going to take a piece of my portfolio. I'm going to take, you know, $2,000, $3,000, $1,000, $500, whatever it happens to be. And I'm going to do selling stuff with that, right? And then you say, okay, and I'm going to take this other part, 300, 500, 1,000, 2,000, whatever the amount is. Everybody's got their own, you know, money. And you say, I'm going to use this for active trading, right? You can do, they can both be done together. You can take one stock and literally do all the things with one stock. If you're watching it anyway, you can do buying and selling stuff at the same time. But how many of us are gamblers? Do we have any gamblers in the house? You gotta know when to hold them. Anybody in here gamblers? Maybe don't admit that, maybe. But even if you're not really, I'm not a gambler. But the house, how many of us know that the house always wins?
All of us.
You're a recovering gambler. So Nettie says, I'm bad at it. Josh says, yes. Diamond hands, baby, yes. So the house always wins. You can pull on those, you know, the one arm bandage, you can pull on those all you want to. Some games I think are easier than others at the casino, but the house always, at the end of the day, at the end of the night, the house is gonna come out ahead. When you're a seller, you're the house. The seller is the house. Even though Walmart offers all kinds of sales and they can mark stuff down to 8 cents, 88 cents, 48 cents. At the end of it all, they're going to come out ahead. The seller comes out ahead. There's just more opportunities for the seller to be profitable. Now, again, that's not to take away from the excitement of buying, because there is definitely a great deal of excitement. You could, as a seller, sometimes we're watching and you're like, we can use that NVIDIA trade. If you decided you're going to get into a put credit spread with the price going up, again, you're going to get, we would have gotten, sellers get whatever you agree you're going to get. But as a buyer, the price can go on and on and on. You have a set loss, you know, you can't lose any more than you paid, but your wins can just go on infinitely. Well, as a seller, you do have set loss, a set reward. Basically, both of those sides are set for you, okay? People who like to have defined risk and defined reward, those are the people who should sell options. All right, there's some very passive strategies. Generally, selling puts is quite passive. Selling covered calls is quite passive. Credit spreads is a little less passive, but you can make it passive by just extending the time out a little bit further. When is a good time to sell options? Because there are situations that call for selling and there are situations that really are more ideal for buying. You can sell options literally in any market. In any market, you can be a seller. Low volatility works really well. Or if you're very clear on which direction we're going. If you know, that really comes from technical analysis and charting and all the things. As long as you know which direction you're going, you can work as a seller all the time. You can get very close to expiration time. This is when you can sell. So we talk about like Thursdays and Friday, JT will tell us that if you're going to be buying on Thursday or Friday, you may want to buy out a week because you need to buy time. If you don't think it's going to pop between the next day, you may need to buy time. When you're a seller, you can literally sell in the last 5 minutes. Last 2 minutes, as long as the market is open, you can sell a trade. Definitely, you can get as near to expiration as you want because theta decay is our friend. Theta decay es mi amiga. Yes, theta decay is our friend. If you're not sure of the price direction, you can be a seller because you can say, I'll get far enough away from support and resistance and I can trade credit spreads or whatever beyond support and resistance and still collect premiums, especially if you're going to do something like iron condors, which is where you sell a call credit spread and a put credit spread. You collect in 2 sets of premium using one amount of collateral. And we'll talk about all these more specifically next week. But If a stock is consolidating, there's some stocks, I think BABA and Oracle. If you look at the Oracle chart, Oracle's been in a zone since I think November. It's been in a zone since November. If you get a stock that's consolidating like that, if you're trying to trade it as a buyer, you need to catch the bottom and then catch the top over and over and over. And there's money to be made there. But if the stock is consolidating, longer term, you can work outside of those support and resistance zones. Before earnings is generally not an ideal time to be a seller. Honestly, it's not necessarily a good time to be a buyer because earnings can feel like, talk about gambling, it can feel like a lotto, which is what we call it a lot of times, the lotto, because you can be prepared to lose all your money. You can be prepared to lose all of it, right? So these are all the environments or the times when you can sell options. And then there's times, of course, when you buy, you're going to buy options when you are fairly certain about the momentum. If there's a huge move happening, you can buy in there. I've been working on how do we use capital flow as a buyer and as a seller. Well, if we're looking at, for example, at Tesla, and you got a bunch of orders and we decide we're going to go with calls because it looks like that's where the direction of the flow is going, then, my community will sell put credit spreads because we're still going to take advantage of the momentum in the direction away from our strikes, but we're doing it as sellers. So I have to straddle the fence because, I enjoy buying as well. But I really like selling too. Selling it's in my heart. Selling's in my heart. But I need to learn. I want to make sure that I can learn going in both directions, doing buying and selling. Here are the strategies that are included in selling. There's all kinds of like nuances and variations to these strategies. Like you can hear about iron butterflies and one-armed butterflies and crooked leg spiders. I mean, they've got all kind of names for stuff. But basically, when it comes down to it, you're going to sell puts, which is officially called cash secure puts or selling puts. This is a bullish or a neutral strategy. When you believe price is going up or it will at least sit still above your strike, then that's selling puts. You can sell covered calls. This is a bearish or a neutral strategy. You're believing price will come down. You're going to need to use at least 100 shares of your position. So I know there's lots of you here who are accumulating shares. And in some cases, you've got over 100 or 200 or 300 or whatever it happens to be. But those stocks are suppressed, but you're still holding on to the shares because you believe in them long term. So I think I remember TJ talking about he's got several positions or a position of Rivian. Well, if Rivian hadn't started to pop yet, you can utilize those segments of 100 shares to sell covered calls against them. So then you're going to use the 100 shares as your cover to sell calls, and then you'll take in premiums while you're still holding on to the asset. It's a way to make money on your shares while they're just sitting in your portfolio, and maybe you got SoFi that cannot figure out how to get moving. SoFi can't figure out how to get moving, and perhaps you own at least 100 shares of SoFi. You can sell covered calls against it while it goes up. And that's a whole strategy to make sure that, you pick a strike that won't cause you to lose your shares, but you can make money as it rises. That's called covered calls. And then the third strategy is credit spreads. It's called vertical spreads. It's called bull credit spreads or bear credit spreads. Credit is the word that's in there. And it's because with credit spreads, you're going to take in money when you first enter the trade. You all saw that on Friday. I did what's called debit spreads, which means I was operating as a buyer, but I made it as a spread. So it didn't cost me as much collateral to get into those trades. So I was able to just get in for less money, but still take advantage of the move as a buyer. But credit spreads is a bullish or bearish or neutral, depending on which side you're on. If you're doing put credit spreads, then you're thinking it's bullish. You think the price is going to go up. A call credit spread means you believe price is going to go down. And if you're neutral, you can do like the iron condor that uses both of those, the top and the bottom. And you can do credit spreads for as little as $50 of collateral. There's several stocks that are 0.5. If you're ever looking at the option chain and you see 0.5, like 38, 38.5, 39, if you see those 0.5s, then those, when you put them together in a spread, that's a 0.5 spread and it uses $50 of collateral. And you can take in $10 to $15. You take in $15 on a $50 trade or collateral, $50 of collateral, 15 out of 50 is a 30% return on your money. Some of us be glad to get 30% on those buyer trades, those buying. We're like 30%, yes, sign me up. Well, if I can enter the trade and pull up 30% right off rip, and then that money is immediately mine. When you're a seller, that money gets put into your portfolio right then, and you can use that money to do whatever you want to do with it. The premiums that you collect are your money to do with as you please, right? You want to buy something else with it, you want to do something else, you absolutely can. All right. Some people we'll take 30% return right off rip, but we can't be mad when the price runs and everybody else starts getting 50 and 80 and 90, and you're like, I took my 30% and I was happy with that. I took my 30% and I was happy with that. All righty, I have introduced selling. What questions do we have? Don't be shy now, you hear?
AP, thank you for
Hey,
the information. I do have a question. I want to know, like, are you going to be talking about specific like spread strategies next week?
yep.
Got it. Okay, yeah, that's like the more advanced stuff. And does that include like Iron Condor and other ones too?
Yep.
Oh yeah, we in for a treat for sure.
I am. I see that Nettie says, what would be the best platform to use for selling options? Honestly, you can use all the platforms that do selling. So I have TD Ameritrade or Thinkorswim. You can also sell on Robinhood. You know, when you're looking at Robinhood and you have at the top of the ticker, you can flip between buying and selling and calls and puts, you just pick sell, right? So you can do it on Robinhood. Of course, Robinhood's drawback is on expiration day. Robinhood is going to shut your shiggity down at 3:30. So if you're trading every day or if you're trading into expiration, you want to be sure to go ahead and close your trades before 3:30 on expiration day, because Robinhood will shut it down. But any of the platforms, just like we see buying stuff, every platform that does buying, anytime, anywhere you see that bid column, everybody's selling as well. You do need to have a margin account when you are selling spreads. If you're selling cash secure puts, that can be done in a cash account. And if you're selling covered calls, you can do that in a cash account. But the 100 shares that you're using for your cover, they have to also be in the cash account. So let's say, for example, you have a margin account and a cash account. Your 100 shares is in the margin account and you want to sell covered call, but you want to sell in the cash account. You cannot. You have to sell the covered call in the account with the 100 shares. So if they're in the cash account, that's where you can sell covered calls. All right. But if you're going to do credit spreads, if you're going to do spreads, put credit spreads, call credit spreads, iron condors, those have to be done in a margin account, because the broker, is going to, even though they block up the collateral for the trade, it has to be, the spreads have to be in a margin account. Okay. Do you have to be concerned with contracts being assigned when you purchase so close to expiration? The only time your things are going to be assigned is if your trade gets breached or if your sale leg gets breached. So you're basically in the money and it expires. So the way you can work around that is there's two ways. You can either trade only cash settled equities like SPX, XSP, RUT, I think not DJIA, whatever the Dow one is. You can trade the things that are only cash settled, which means there's no shares. SPX and XSP and RUT, they don't have shares. So if you're trading something that doesn't have shares, you don't have to worry about being assigned. If you do have something that has shares, then the way to avoid assignment is to make sure that you close your trade, especially if it's in the money, close your trade before before expiration, before the market closes, because all of that assignment stuff of who gets what shares, all that happens after the market closes. So if you're out of your trade by the time the market closes, then there's nothing to assign to you because you basically are no longer in a trade. Like I'm not even here. I'm not even here, right? I use Thinkorswim. I'm still on TD Ameritrade. But of course I'm switching over to Schwab on the 10th. So I use Thinkorswim. I also have a Robinhood account. I trade shares and trade spreads in Robinhood. So I use those two, Robinhood and I use Thinkorswim. Okay, those are the brokers that I use. Is your profit the price of the contract times 100, just like buying? Yes. So if you enter a trade and there's a 0.2 in the column, when you're getting ready to do your trade, if it's 0.2, then you times that times 100, and I'm basically going to make $20 on that trade as premiums. That's the way that goes. What other questions? We all questioned out. Y'all wait for we get to the strategies next week. Like, let's talk specifics. Let's talk specifics. If there's something that I've talked about that you have more interest in, I do have a YouTube channel. Sure. Well, I have a YouTube channel. Educator to Trader is my YouTube channel. Got a bunch of videos there on these various topics we talked about. If there's some interest in a little bit more, you can definitely find me there. I also have social media. I'm at Educator to Trader in like all the places. You could send me an email if you'd like. I'm Arlissa at educatortotrader.com. Of course, I have a community. It's educatortotrader.com, and I do have training products and all that good stuff. If a training product is something that more suits you, I know for me, I go to YouTube sometime and I'll look for different topics to get myself some understanding, but sometimes I need it to be like step, and I don't always feel like I want to piece it together from YouTube. So if you want something like that, there's educatortotrader.com. So Nettie says, I'm ready for the meat and potatoes. Any specific indicators do you think work well for option sellers? Well, one good thing about option selling is you don't really need a lot of indicators. Really, you just need support and resistance. What you're looking for is where will price not go, right? So I do have EMAs on my chart that I use just to help me with some support and resistance areas, but you don't really need any indicators. We don't even really get concerned about the volume or any of those things, really. I'll look to see where there's a lot of volume so I can maybe pick the strike beyond that one sometimes, because if there's a lot of people at the 300 strike, then I may go to 305 because everybody's trying to get to 300, and if I'm at 305, then that strike has a higher potential of being out of the money. So we may do that, but mostly just charting support and resistance, finding out where will price not go. Okay. I was going to say something else about not indicated, but something that went along with that and it slipped my mind. With the cash account, I can only trade certain stocks. No, with a cash account, you can trade any stocks you want in a cash account. It's just what strategies are you going to trade? If you're in a cash account, you're going to need to most likely be a buyer. And you could also be a seller, but you're going to need the collateral there in order, if you're going to do cash secure puts, you need to have the collateral for that. If you're going to do covered calls, you need the 100 shares in there. Who decides the premium amount? The market. The same people who decide how much we pay to enter contracts is the same people who decide how much you're going to get paid when you enter. Again, if you look at any option chain, you're going to see on the option chain the bid and the ask column. That bid column is the column for the money a seller gets. If you click on that, The bid column is the money that the seller will receive when they enter that trade. I'm gonna definitely show a lot of that stuff next week. We'll have the platform open so that way we can see what's going on. But yeah, the market decides. You're welcome, Rashad. Well, selling is one of my darlings. Am I even sharing still? Why do I feel like I'm not sharing my screen anymore? Where'd it go? I don't see the thing that lets me share or not share. It disappeared. I don't even see the thing that
I'm
lets
still
me
sharing. We can still see your
stop
screen.
sharing. Cool, thank you. I'm trying to see where did the stop share thing go? It disappeared off my screen. Oh, I think I see it. No, I don't see it. Ah la la. Where'd you go? Well, I guess we can, oh, there we go. It was hiding behind some stuff. Selling is something I've done. As I've told you, I've done, that's what I did like from the beginning. And it's still, you know, my darling. I see people in the market who are sellers. Many of them don't look like me who are sellers, but it's our space. And I feel like any of the extra tools we can add to our tool bag just makes us, you know, just that much more dangerous. We know a hammer don't work on everything. Sometimes you just need a screwdriver, but sometimes a screwdriver don't work and you really just need a hammer. So selling is just another side of the options market, especially, listen, as y'all are continuing, we are continuing to grow our capital. You want to be able to put some of that capital into strategies. You still want to maybe leave it in the market, but you want to put it in strategies that are going to grow your money in a passive way versus actively trading it. This is one way. This is definitely one way. We can do leaps, yes, and longer term things like that, absolutely. But you can also just be a seller and sell weekly options every day. Some people, I mean, we have a whole strategy that I created that where you sell on SPX every single day, 0 DTE or XSP or RUT. And every day, I think Randy Yancey made a post yesterday about how he waits the last hour and a half of the market and he enters as a seller. He sells call credit spreads at like the 20 delta, I think he said. And he pulls in $25 or $50 each afternoon. And he's in that trade for an hour and a half. And he can pull in $25 to $50, which is a 10 to 15% return on his collateral every single day. Talk about rinse and repeat, and you're only doing it for the last hour each day. And you decide you're going to throw, you know, a couple thousand of that. Actually, there's a video on my YouTube channel where I talk about how you can double your money as a seller in 10 trading days. Because if you take in just 10% each day and that continues to grow, then after 10 trading days, you've doubled your money. That's on one of the videos on my channel. Dion said, excited to try this approach. Thank you, Josh. This was a really good class, an intro to option selling. Look forward to the week to next week as well. This was great. See, if I had a teacher like you in school, I would have done better. Shout out to you for the Lion King reference. Listen, I'm a singer song. I have resisted the urge to sing all the songs while I've been teaching with you all, because generally I sing all the, my mind works in music. It's weird, but okay, I'm done. JT, I'm finished.
Hey, Auntie AP, I was gonna ask, can you drop the link to your YouTube in the chat?
Yeah, I can.
That'd
Be
be
great.
dope. 'Cause I'm gonna check you out right after this.
All right, AP, while you're doing that, I just want to say I think this was an amazing intro. You got a lot of people, including myself, excited for part 2, ready to get into the meat and potatoes, like Nettie said. I think this was great. I know this was recorded, so whenever, go ahead and send the link over to myself or to TJ, and we'll get this posted in the chat for y'all. Y'all do us a favor, come into Discord, come in Stock Talk, and let our friends know that weren't on this call that they need to check the recording, because this was definitely a great intro. And if they want to come into part 2 and get into the specifics, tell them they need to check out this class first. Thank you so much again, AP.
Absolutely. You're welcome. You're welcome. I'm glad everybody enjoyed this and I hope you got some great value out of it.
Definitely. Did you have any last minute comments you wanted to make before we wrap up for the night?
I'm good. I'm good. I thank y'all once again.
All right, I see that your YouTube link is in the chat, so y'all definitely make sure you subscribe to AP's YouTube channel. And we will be back for part 2 next
Okay.
Monday. And of course, you already know we're going to be back on live trading tomorrow morning when it's time to make some money again. So y'all have a good night. We'll talk to you soon.
All right. Goodbye, everyone.